Good morning and a very warm welcome to all of you. My name is Tom Livick. I'm from AccessPay. This is the 10th episode of AccessPay's Finance Transformation Unlocked. It's a series of live events designed to share content that helps finance teams to modernize and thrive in today's changing world. I'm delighted to be joined by Harcus Copper from Barclays Bank. I'll let Harcus introduce himself.
Thank you, Tom. Good morning, everyone. Good afternoon, good evening, wherever you are listening from in the world. As Tom says, I'm Harcus from Barclays. I head our digital platforms team. What that basically means is I work within the product function and I manage all of the customer-facing applications that allow you to connect to us to access the ultimate product or service you wish to use.
Thanks, Harcus. We're going to spend the next 30 minutes or maybe 35 minutes talking through three different areas. The first is to set some basic principles around payment and statement automation, but specifically for foreign exchange brokers. We'll then go into a little bit deeper into how it's possible to get full control of the end-to-end process, if you like, how to super automate your payments and statement process. And finally, what are other capabilities available today, or maybe even in the near future, to really support an FX company's process. We're aiming to finish, as I say, by maybe 10:30, 10:35, and this session is being recorded. So if you do wish to re-watch any of the points, please go back to this link. If you have any questions, go to the chat box that's on the right-hand side. We'll do our best to answer any questions as we go, and if not, then we'll pick up the questions at the end. So without further delay, I'd like to get started. Harcus, to make sure we're all on the same page, we're referring to foreign exchange companies. What service is it that FX companies actually provide?
Yeah, they can be described in a number of ways. The phrase FX company or money service broker, payment service provider, even fintech sometimes is the simple way of describing them. And at the heart, these are entities who offer some form of ability for their end customer to purchase and utilize foreign exchange. So if I wanted to send funds overseas in a different currency, let's say Australian dollar, then I potentially could acquire that type of capability, obviously, from my bank. But equally, there are the type of customer we're talking about here available in the market that offer those types of services as well.
Thanks, Harcus. So this is all around a company or an individual, but today really we're focusing on those companies who are wanting to engage with another organization to provide that FX service for them.
Absolutely.
Okay. So what are the challenges that FX companies being able to process these payments? What are the challenges that they typically face?
Yeah, in some ways, it's very similar to any entity obviously interfacing with their own banking partners for the purposes of instructing payments and receiving balance and transaction information back about those payments for reconciliation and all those good things. The extra complexity, if you like, with an FX provider is, of course, the fact that they have an end customer with whom they equally need to interact. And some of that interaction will be part of potentially a payments journey, certainly part of an FX journey. And therefore, there are extra parts of that journey that the FX provider themselves are directly responsible for, but equally that they require support from their banking partners, depending on what leg of the instruction we're talking about. So it could be that first and foremost, they need to receive the funds from their customer to know that they have obviously the payment ready for the outbound payment they're making on behalf of their customer. And then there are, of course, absolutely regulatory obligations that anybody operating in this space has to adhere to.
So if I can summarize that, then really the challenges are, there are potentially three challenges. The first one is the regulatory challenges that you just mentioned. The second is that effectively these are payments on behalf of, they're not their payments. So if you think about a normal corporate who's maybe making a treasury payment or supplier payments or payroll, they're their payments that they're making, but these are payments on behalf of. And then the final point is obviously these need to be real time. So unlike a payroll process, which if they're using BACS in the UK, that could be a 3-day cycle. And obviously this is almost the opposite of that, where this actually absolutely needs to be a real time process.
Absolutely.
So thinking about those FX providers, how would they connect to the banks to manage those three: regulatory, payments on behalf of, and then real time processes? How would they manage to do that?
Absolutely. And it really comes down to exactly those points that you just raised. Obviously, any entity operating an account with their banking partner will have a number of methodologies through which they could interface for the two key things we're talking about here in terms of broader cash management requirements. Obviously, the ability to instruct a payment and the ability to receive balance and transaction information about those payments. But as you say, they have to do that in a particular way. They have to make sure they meet their regulatory obligations of providing all the requisite details within the payment instruction that are required where you operate a payments on behalf of model. So the traditional methodologies that you and I may employ to talk to our bank would use on some kind of online channel, and that's absolutely fine. But one can assume in this context that the FX provider is providing some kind of solution that may be using some kind of graphical user interface via the internet, whereby their end customer obviously applies for the product that they're ultimately seeking from their provider, which results in a transaction, which then gets fed through to the provider's banking partner to ultimately settle with the end beneficiary. So doing that through an online channel wouldn't be terribly efficient from the FX provider's perspective, because of course
Right.
you have to capture their customers' application at the front end, and then to all intents and purposes rekey it, which introduces the risk of operational inefficiencies and errors. So exactly as you put on the screen here, we start to talk about what we would otherwise more broadly refer to as integrated solutions. And the reason that integrated is all of the options that we'll go through in just a moment on the screen here provide the opportunity for the FX provider in this context to interface their systems directly with the bank at some level, and then to ensure that via that interface, the content of the messaging that is exchanged meets those regulatory obligations. So if you'd like, I'll take you through the options you've got on screen here now.
That would be great.
So out of them, they all look very, very similar. SWIFT is the Society for Worldwide Interbank Financial Telecommunications. It's basically a body that was created by the banks in the 1970s for the express purpose of exchanging messages over a secure network and having those messages in a standardized format. At the end of the 90s, SWIFT opened their doors to a degree to otherwise corporate entities, non-banks, non-bank financial institutions, corporates more broadly, to exchange messages with their banking partners, which provides the benefit of the entity having joined SWIFT being able to talk to all other SWIFT members who in this context would be their banking partner. So that works particularly well if the FX provider is multi-banked. It means they have one connection to each of their banks over a network that was designed specifically for the purpose of exchanging financial messages and in a standardized format. The alternative will be to look at a host-to-host solution. Now, host-to-host again looks very similar to Swift, and we'll bring a diagram up in a minute just to highlight this. But to describe host-to-host and the differences, the subtle difference between a host-to-host and a Swift is whereas Swift provides in essence a central body, Swift themselves, a middleman, if you like, that provides that connectivity to multiple end partners on their network. Host-to-host is a peer-to-peer connection, where the connection would be between the FX provider and an individual bank. So if they're multi-banked, they would have to put in multiple connections, one for each bank that they're talking to. And then as we develop out these capabilities, the kind of the latest iteration of these types of integrated solutions that is beginning to prevail in the market are APIs. And APIs are very similar in the way they operate insofar as it provides a type of connection, but using a fundamentally different model to connect and for a slightly different use case. So if we look at the diagram that kind of pictorially represents this, you'll see very much as that comes up on screen that we draw that with the client, the FX provider on the left side of the screen. And I don't know, Tom, if that diagram's coming up, but I presume it'll be up in just it's not there on my screen yet.
The diagram is absolutely going to come up in a second. So it's great that we're talking about these foreign exchange companies primarily for B2B. And the diagram is going to show the process of how that moves from the payment instructions move from the FX broker's back office system on the left-hand side through a payment processing application like AccessPay, and then onto the bank via the appropriate channel. This diagram looks like it's very similar to, say, if there was a corporate. It looks very similar to a corporate treasury process or a corporate payment process. What are the differences for an FX provider between that and what this diagram is showing and say a corporate treasury process or corporate payment process.
So you're absolutely right. At its heart, it's exactly the same. These types of capabilities offer efficiency in processing through direct connectivity, but what they also offer is the opportunity to create value-adding workflows. And the real difference from an FX provider, therefore, is the subtlety between how a treasurer instructs a payment is because they're making that payment directly for themselves and for their own settlement purposes. You called it out exactly right earlier on when you said that from an FX provider's perspective, these are payments on behalf of.
Right.
So there's a part of the diagram that isn't displayed. This is exactly to your point around how you achieve an efficient connection to your banking partner. But of course, what they equally want is to ensure that they have been paid by their end customer for the transaction on which they're about to embark under that payments on behalf of type of model. So one of the key differences before we start to talk about how they might efficiently receive funds from their end customer is that they have to absolutely carry all the regulatory data that relates to all of the parties in that transaction. So there, in essence, is an ultimate debtor. So if I'm the FX provider, you are my client intending to pay a company called AccessPay, then obviously it would be Harcus FX provider on behalf of Tom Livock paying the beneficiary AccessPay. And if there was indeed even an ultimate beneficiary, that would also, under regulation, required to be quoted. So over each of these methodologies, we ensure that the right fields are available within the message or the file that is used to transmit the payment instruction to the bank. And then the bank obviously ultimately settles the final leg of that instruction with the intended beneficiary bank, wherever they may be in the world. And one thing we didn't say at the front, right, obviously, is typically these are cross-border payments. Of course they are, because there's some form of FX involved.
Yeah. Okay. So although the diagram, as you said, although this diagram is showing the processing, it looks like a corporate payment application. Actually, there's a level that's below this. We're not displaying here, which actually requires that payment on behalf of those fields to be populated in order that actually the ultimate debtor is providing that credit onto the account, which is then going over to the beneficiary who's ultimately getting paid. And so rather than a typical corporate payment process, which is debtor going to creditor or originator going to beneficiary, actually there are multiple parties involved in here, and as you mentioned, the Harcus FX service could be that intermediary.
Absolutely.
Great. Okay, so what would be interesting now we've started to explore this is actually what does that payment journey actually look like? What's happening as from a if you like, from a message perspective, what's happening as that money is flowing through? And you mentioned Aussie dollars, so let's carry on that flavor. So let's say I want to pay you, Harcus, and I'm going to use an FX provider to make that happen. I want to pay you, let's say 200 Aussie dollars. I just checked it actually before we came on. It would actually be 183 of the Aussie dollars would be the actual amount, but for the purposes, let's make it 200. And let's say I've only got a GBP account. So I'm going to send you, let's say the agreement is I'm going to send you 100 GBP, 100 sterling, and then that process is going to ultimately end up with the money being translated and actually being delivered to the beneficiary as 200 Aussie dollars. So would you mind just talking through that process and what happens in each of the touch points, please?
Absolutely. And what I'll do is I'll make various assumptions because there are a number of ways that this could be achieved. So for the purposes of example, I'll make some broad assumptions. So the broad assumptions are that the client is obviously the end customer of the FX provider, is obviously seeking the payment through the FX provider because they've found their service to be something desirable at the right rate with the right charges, and they've gone, right, this is the provider I want to make my payment. The FX provider is using the services of the bank, of course, to tap into the bank's correspondent banking capability to settle instructions around the world and get the payment through to the beneficiary bank ultimately in Australia. So let's go backwards down the chain.
Yep.
In order to get the funds into the account in Australia, the FX provider has chosen a banking partner in the UK that they know has that capability. And we banks, we do that under a correspondent banking model. What that basically means is we hold accounts with various banks in other countries that allow us to settle between each other's books. In essence, if you like, a slightly more complicated double entry bookkeeping system that says take the money off of the account we hold in the UK, we post that to the equivalent account of that banking partner, that correspondent in that country, and they reverse those entries in that country for us based on a message we send saying this is the payment that needs to settle within Australia to the ultimate beneficiary bank. And that message flows over the SWIFT network, by the way. We won't necessarily get into that detail today, but certainly happy to cover that on a call in the future. But basically, that's why the FX provider has chosen to bank. In this case, let's say they're banking with Barclays. So they hold their operational accounts with Barclays, knowing that when it comes to making the ultimate payment, Barclays will use our correspondent banking network around the world to get the funds into the account, ultimately with the beneficiary bank in Australia through our correspondent in that country. What the FX provider therefore has to do is first make sure that the funds from their ultimate customer have hit their account with
Yes.
Barclays, in my example,
Yep.
so that they know they've been paid before they pay away. Obviously, we'll give the instruction to Barclays to pay away through the channels that we've just instructed. So there's a couple of points to play there. First and foremost, they need to allow an efficient method through which the ultimate debtor, their customer, can instruct the funds through to the account held at Barclays, and then be able to reconcile that so they can see that the funds have hit the account. And this is where those three channels come in to a degree, but where we can also introduce something that was on a previous slide that I didn't get to, which is open banking as an element within that journey. So let's talk about that element first. In order for the customer, let's say the journey is Tom is paying Harcus, Harcus holds his account in Australia, and the FX provider is called FX provider A, and they hold their operational accounts with Barclays. So Tom has somehow got to get the funds from his account into FX provider's account at Barclays.
Right.
Now, of course, what FX provider A could do is say to Tom, simply pay me, right? And they could send a bunch of details or provide a bunch of details on their online application for the service that Tom is buying to offer up the account details at Barclays for Tom to do, in essence, an authorized push payment directly through his own online channel. And that works absolutely fine. But there's risks there. There's risk that Tom doesn't type the right amount or doesn't type the right reference. And then obviously, in order for FX provider A to safely, securely, and happily make the payment away through to the beneficiary bank in Australia through Barclays, they want to know the funds are on the account. So then they're going to need data from Barclays, obviously, against which to reconcile that Tom has actually already paid them. So they're going to want to monitor the account throughout the day to see that those funds have been received before they release the payment away. So the key part in terms of the channel that we were talking about earlier is, in this context, of that first part of the journey before the FX provider actually instructs the payment away, is to make sure the funds are on their account. So they could do that by looking at an online channel, but that means a person logging in every now and again to check for funds. Not terribly efficient, but works. Or they could receive some messages over the SWIFT network if they join SWIFT. And we'll come on to some message types a little bit later on in the call that alert them to the fact that the funds are on the account and they can see that the funds have arrived. Similarly, they can receive very similar messages over a host-to-host connection. Again, fully automated. They can set it up at a frequency depending on the service provided by the bank. Let's say that's every 15 minutes. And therefore, their system is receiving data every 15 minutes. And they could write some automated routine and say, oh, yes, the funds are now in from Tom. I can instruct the payment. Or the latest variation on a theme here, as we said, in terms of those channels described, could be an API link. So the the FX provider could have an API connection to the bank through which they call balance and transaction information frequently. I mean, literally every second or so. And then again, write automated routines off the back of the receipt of that data to confirm that the funds that they were expecting for Tom were in the account in the first place. But all of that presumes that Tom's got to push the payment. Another alternative, particularly in the UK, is to employ the services of an open banking provider to create a better client experience for Tom when it comes to the point of getting the funds into the FX provider's account. And we won't go into too much detail here, but suffice to say that the open banking solution is entirely regulated, and all players in the solution have to equally be regulated. And they'll be described as either one of two types. There'll be a payment initiation service provider or an account information service provider. So in this context, if they're a payment initiation service provider, a PISP, then that gives them access to the open banking APIs that are touched into all of the banks in the UK. This is a UK solution. Open banking obviously exists in other countries as well and Europe, but I'm describing the UK variation of that. And that gives the account holder the simple opportunity at the point of buying the service through the FX provider's website, through their URL or their online solution, to say, right, how are you going to pay us? Will you simply consent to that payment being initiated by us on your behalf, so that all that reference information can be entirely accurate and you haven't got to
Right.
key that information directly. So as the user, then Tom simply gets their traditional online banking screen appear within the FX provider service, and they use their credentials to consent to that payment. And then the FX provider sends the payment instruction with the consent, and the funds flow directly from Tom's account into the FX provider's account at Barclays. And then the final step is the FX provider obviously now knows the money is in the account, and then they send over one of the channels we just described the payment instruction in a given format with all the requisite information to meet the regulatory requirements of including obviously the ultimate debtor's details, and then Barclays completes the settlement through to the beneficiary bank on their behalf.
Thanks, Harcus. So let's see if I can try and summarize what you just said. So thinking about the customer of the FX provider, then there are effectively one of the biggest challenges is the FX provider knowing that that customer has paid the £100 in this case, and it's being received into their Barclays bank account. There are three ways that they could do that. So the first way is using a MT942, which is an intraday statement information that comes from Barclays every 15 minutes or so, and they're tracking that information. The second way is to use an API from the bank, and again trying to update the balance position to see if that transaction has been credited onto the account. And the third way, which is sound like the most interesting, was using open banking as a way. So the FX provider would use a PISP and the open banking to actually request the funds from Tom, and Tom would then allow those funds to be debited from his account and automatically then be credited to the FX provider's Barclays account. Have I summarized that first part of the journey correctly, Harcus?
Absolutely.
Yeah, and then the final part is actually which is actually where the funds move from the UK, in this case, cross-border payment over to Australia. That $200 Aussie payment into using the appropriate rails. Great. Okay. Thanks. So now we've got the payments flowing from moving from the FX provider to the bank, and so what would be useful is to talk through: is there now another layer of automation that can be applied to that process to help the FX provider manage the communication with their counterparty bank in a much better way? So if you like, I'm coming on to the super automation part of the discussion. So I think there's a slide we have which shows some of these message types. So Harcus, would you mind just talking through some of these different messages that help to automate this process to the next level?
Certainly, and again, this is just one methodology, one option that might be employed in this context. So all of these messages are Swift messages. They all carry the acronym MT. MT stands for nothing more clever than message type. And everything that starts with a 1 is something to do with a payment, and everything that starts with a 9 is something to do with a report, balance and transaction information in this context. So if the FX provider is directly a Swift member, then they would certainly be able to use each of these message types as part of this journey. If they are connected via a host-to-host, some of these message types would be available to them as well. And if they're connected via an API, it wouldn't be these messages, but it would be something that offers a very similar type of capability. So first and foremost, the payment instruction that goes out from the bank via our correspondent network to settle the ultimate funds with the Australian bank, that's going to be an MT103. So under various scenarios, what the FX provider might want is a copy of that. Banks don't typically encourage that because, of course, you have already, as the entity that's instructed the payment in the first place, you have all the information that we have about the outbound payment, but some have requested it over the years as a form of receipt. So there's various changes in the market looking at a better way of doing that rather than directly receiving a copy of an MT103. So you might, for example, instead receive an MT900 debit advice on the account. So you know that the payment has been made, and that as far as can be told via this model, we're going to get to the super bit in just a minute, that the payment's gone out through the correspondent network to the beneficiary bank. Equally, if you're expecting a credit on your account, like the receipt of Tom's funds in our example, you could have an MT910 credit advice that shows you credits that have been received to the account, depending on which credit types banks have enabled via that type of advising. Some limit them to instructions that are received over the SWIFT network in the first place. Some offer up those advices for all transaction types, and it will differ by bank. And then in between, if you're a member of the SWIFT network, you can raise queries on payment instructions using MT195s and get a response via 196. You can cancel instruction using MT192. And as Tom already said, you can receive an intraday report that shows all the transactions posted to your account in the form of an MT942. The only one I wouldn't encourage on there is a 199. An MT199 is a general message. There's no format to it. There's no structure. It's free format, and therefore operationally it's very inefficient because you're writing text to say, "Oh, could you look at this thing, please?" So there's no automated processing around a 199. But as I say, there are equivalent methodologies through the other channels that offer this as well. An MT942 can flow over a host to host. Absolutely, offers exactly the same data. Right. But you might receive it in a different language, like a camped message, which is an ISO 222 XML equivalent. But I think where you really want to get to in terms of the super automation, these are the types of things that help you, as I say, monitor that instruction end to end. But it's not truly end to end because it doesn't get as far as the beneficiary bank in this context. Right. So maybe we'll move on to the next topic, which is going to be around some of the initiatives coming in that field.
That would be, right. So you've obviously hinted at this, and you also mentioned MT199s. So let's move on to what the future looks like. And obviously, Swift GPI has been around now, I think, since about 2017. And there's two parts to Swift GPI, as it mentions here. So one is pay and trace, and the second is inbound tracking. So what's the difference between, well, firstly, what does this actually mean? What is Swift GPI, and what's the difference between pay and trace and inbound tracking?
Yeah, absolutely. So you heard me describe in very loose terms, without going into too much detail on a relatively short call like this, how the banks settle instructions with each other over the Swift network. We basically send messages under a correspondent banking model that say, this is a payment that we like for you to handle within Australia, in our case here, on our behalf, and then settle the funds between our accounts on a kind of double entry bookkeeping type basis. Now that only goes so far, obviously, because the payer doesn't have access to those messages because they're obviously secure between the banks. So what Swift have done is they've created the GPI version of their network, which adds what's called a unique end-to-end tracking reference, a UETR, to each payment that flows over that variation of the network. And the majority of payments now do flow over that variation of the network, which means various parties to the transaction can see exactly where the transaction is on the flow through to the beneficiary bank, and ultimately can see that it's been posted to the beneficiary's account. So it's a case of giving the FX provider access to that information. If they are a Swift member in their own right, based on one of those three channels we talked about earlier on the call, then they would be able to access the tracking capability directly through Swift as a member. So as long as they have access to the UETR, they can see exactly where that payment is. If they're not a Swift member, again, depending on the various methods through which banks expose this data to their customers, they would, as a minimum, be able to log into the bank's online channel that they use for day-to-day reconciliations and enter a trace request that will then ultimately look up the UETR and again display a response that says this is where the payment is on its journey through to the beneficiary bank. And in a similar way, inbound tracking is the same thing in that context. What's coming via Swift GPI though is equally something called pre-validation. And what pre-validation will offer when it's enabled is the ability up front to validate the account details in a much richer way than is available today, to ensure that you remove again the possibility of incorrect information flowing cross-border, because each country has different requirements. And it goes so far in certain countries as stating equally that the account is open and available to receive funds. So Swift GPI pre-validation is a really interesting one to watch out for next, beyond pay and trace and inbound tracking, because it offers potential for reducing payment errors right at the front door, and therefore reduces the operational burden of fixing those particular payments and repairing them.
Okay, so I think this is exactly what you said. This is really, we're getting to the point of super automation here, where one is the FX provider knows that the beneficiary has actually received the funds using pay and trace, which obviously up until now has not been possible at all, but other than actually contacting the person directly and saying, have you received the funds? And then the other interesting part is the inbound tracking. So actually, the FX provider would know if they're receiving some funds coming into their account. And then the third is the pre-validation before the payment instruction is delivered to the bank, going through a pre-validation process to know that those accounts actually exist and that they're open to receiving funds.
Correct.
Excellent. Okay. So there's two other things on this slide. So one is the migration from MT to MX, and the other is around open banking, which we've already covered off part of the open banking part. So if we just maybe just focus just next minute or so just on MT to MX. So this is the migration from traditional Swift messaging to the new XML format.
Yeah, and this is important in a number of contexts, right? So at its heart, we've spoken about Swift a number of times on the call, and I mentioned what MT stands for, right? Swift MT is the message type, and that's the proprietary language, if you like, of Swift for messages that flow over a particular variation of their network called SwiftFin. That message type, in the context of the correspondent banking model I described, the exchange of information between the various bank partners that get the funds cross-border to the beneficiary bank, that along with a broader industry initiative at the various clearing scheme levels domestically. So this includes, by the way, different message types that are employed in BACS and CHAPS and faster payments in the UK, equally migrating to what is referred to as MX in this slide. That is a wider industry initiative to move to a messaging standard called ISO 20022, which is an XML-based messaging standard. So the equivalent of a payment instruction, other than an MT 103 or an MT 101, would be potentially a PAIN 001 in XML speak, PAIN standing for PAIN, payment instruction. So at its heart, it's simply a case of saying we're moving away from an old message-based language to a new file-based language for the exchange of data at the clearing and interbank level. And over time, therefore, that will make changes at the customer to bank level. So in this context, the customer of the bank is the FX provider.
Right.
If the FX provider is joining the SWIFT network in their own right, and they're a regulated entity, as they most likely will be, SWIFT will classify them as a supervised financial institution potentially. And SWIFT therefore have a deadline against which they will switch off the use of MT messages in the supervised financial institution context, which will be broadly 2025. So by 2025, if the FX provider was using MT messages to deal with the type of flows that we were talking about just now, they won't be able to. They'll have to migrate to the ISO 20022 equivalent. We banks certainly will have to by 2025, and other schemes that that aren't Swift based are going on that journey at different timelines, and we banks are already responding to that. So that's basically what MT to MX means, is this move away from the Swift language to a broader industry language.
Great. Thanks for explaining that, Harcus. So we're getting towards the end of the webinar now. Just wanted to see if there were any questions that we have. I can't see any questions in the chat box, but I was asked a question the other day from an FX provider that I was talking to, and it was actually on the MT to MX migration. And the question was really, what does that look like? Do I have to, is there going to be a period of time where there is an overlap, and that actually the banks will offer both an MT format and the CAMT format if it's statements, or the PAIN format or the PAX format, depending on the payment type from the banks? Is that going to be a period of time when both are supported?
The simple answer is absolutely yes. The slightly more complicated answer is it will depend how you're connecting to the bank.
Okay.
If you're connecting to the bank via Swift, some of that is determined by the explanation I gave just previously, which is that the Swift network itself will stop accepting MT messages, stop accepting the flow of MT messages between certain counterparties. If you're classified as a corporate on the Swift network under a Swift classification, then yes, you'll be able to still use MT messages for quite some time after 2025. If you're classified as a supervised financial institution, you won't. Now, as a bank, equally, there's a conversation to be had with our clients around how long do we continue to support the older message types because our customer systems are geared towards them. Now, obviously, in the interbank space, we will have to move at the timeline set by industry, and that's absolutely right and proper. Of course, it is. But we have an option, a choice, as to whether or not we continue to support what in essence will become legacy formats. So we convert what we obviously have to do in the interbank space into the legacy formats that exist today so that we can continue to service our customers via those legacy formats. And that's a question obviously for each bank independently, but absolutely there will be a period of parallel running. Let's say the caveat to that is if you're a Swift customer yourself and you're a supervised financial institution, that's predetermined, right? That would just be a drop dead. You can't do it anymore.
Understood. So actually what you're saying is there is this period of time where there is an overlap, but actually what's the most important thing is putting together a plan to help that FX provider move from where they are now. If they're still using the traditional MT messages, they need to put together a plan quickly to move to the new MX messages.
Yep.
Great. Well, thank you. I'm going to try and now summarize very quickly in the next 30 seconds what we talked through in terms of payment super automation for FX providers. So the first point that we started talking about, which was really interesting, was how the FX provider can make sure that they've received the funds from the customer. And this time we were talking about Tom being the customer of the FX provider. And one nugget that you gave was about using open banking as a mechanism of actually requesting the funds from Tom. So actually Tom doesn't have to do anything at all other than approve that those funds to be debited from his bank account. The second, we started talking about MT messages, and particularly MT19X and MT9XX messages, how that can help to build on the automation and help to give more control around the payment flow. That actually went on to Swift GPI, particularly pay and trace, inbound tracking, and in particular pre-validation, which is coming soon. So those things really give the super automation that we've talked about. Harcus, anything else you'd like to add?
No, I think that's a really good summary. Thanks, Tom. But as I say, there were various assumptions that we made in this call, and one size doesn't necessarily fit all. And it's always worth talking to your partners through AccessPay and your banks to say, let's work through the best solution for your particular business needs.
Well, Harcus, thank you for your insight into the FX providers, and thank you all for listening. It's been a great pleasure in talking to you, Harcus, and we look forward to seeing you again very soon. Goodbye, and thanks for now.
Thanks, everyone.